Imagine you have some money to invest. It might be 5,000 naira, 50,000 naira, 100,000 naira, 2 million naira, and you don't want that money sitting in the bank. You want the money to grow. And then an investment option comes to your mind, mutual funds. And then you went to make inquiries and they tell you, oh, there are different types of mutual funds. You have money market, you have equity fund, you have this and that. And then at the end of the day, you even get more confused. Now, here's the interesting thing. There are different types of mutual funds. The mutual fund that may be suitable for you if you need that money in the next 6 months is different from the mutual fund that will be suitable for you if you need that money in the next 10 years. So in this video, we are going to be looking at the different types of mutual funds. We are going to be considering 5 types of mutual funds. There are so many types of mutual funds actually, and we are going to be using the Stanbic IBTC mutual funds as a case study. I'll explain what each fund invests in, who it is designed for, the risks that are involved, how each of these funds has performed in 2026, and most importantly, how you can start investing in any of your choice mutual funds. Now, the number 5 on the list today is one type of mutual fund that a lot of people actually overlook. But guess what? In this year alone, it has made over 50% return. So make sure you don't miss out on it. Hi everyone, welcome back to my channel. My name is Adeshola. You can call me Shows. I'm an economist, an investment analyst, and a chartered stockbroker. If this is your first time here, I want to say a very big welcome to you. And if you've been following up my channel, I want to say a very big thank you. Thank you for your likes. Thank you for your shares. Thank you for your comments. I see them all. Thank you so much. Please, if you've been watching and you find my content helpful, kindly hit that subscribe button and press that notification bell so that you always get notified anytime I upload new videos. And guess what? At the end of this video, I'm going to be sharing with you a very important update, and please make sure you don't miss out on it. Now, before we go into the different types of mutual funds that we have, let us consider one very important question. What exactly is a mutual fund? So think about mutual fund like this. Think about the fact that you have a particular money to invest. Let's say you have 100,000, you have another friend that has 500,000, you have somebody else that has 1 million, you have somebody else that has 5,000 naira, and every one of you want to invest, but you don't want to invest separately. So your money is put together into one large investment, and then a portfolio manager helps you manage that fund depending on the goal, depending on the objective of that fund. So if the fund performs well, everyone shares in the returns based on how much they have contributed. So in simple terms, a mutual fund is simply a pool of investments. Different investors pool their money together, and it is being managed by a fund manager. Yes, this fund manager is actually a professional. The professional helps you manage the fund. So there are so many advantages when it comes to mutual funds investment. The first one is professional management. So you have a professional help you manage that fund. You don't have to worry yourself about how to analyze the stock market. You don't have to worry yourself on what or the particular decision you need to make to actually make your investment. You have a professional who helps you manage the fund. The second one is diversification. So instead of you investing in only one asset, most mutual funds are diversified. They are well diversified across different asset classes. This helps you to reduce risk. The third one is the fact that it is easily accessible. So for most mutual funds in Nigeria, you can start it as low as 5,000 naira. So you don't need a large sum of money to actually start investing in mutual funds. Now, here is one very important thing. Just because it is called a mutual fund does not mean they all do the same thing. There are different types of mutual funds, all depending on your goal and what exactly you want to achieve. Some are there to help you preserve your capital. Some are there to help you to grow your wealth over time. Some are even there to give you exposure into some dollar assets or dollar investments, or even Sharia-compliant investments. And that exactly is what we are going to look at in this video. Now, a quick disclaimer. This video is actually for educational purposes only and does not serve as an investment advice. You know, I always tell you on this channel, you are definitely the CEO of your own portfolio. So make sure that you do your own due diligence, you do your own proper research into every one of these funds. And the Stanbic IBTC I'm mentioning in this video is just for a case study, not serving as an investment advice. So the first mutual fund I'm going to be mentioning in this video is a very, very popular one. A lot of people are very familiar with it. In fact, when you talk about mutual funds, the first thing that comes to your mind is money market fund. So imagine you saving up for rent, for your child's school fees, or something that you need, a particular money you need in the nearest future. Now, you don't want that money just sitting idle in the bank. You want that money to actually do something for you while not taking on so much risk. Then that is where the money market fund comes in. So a money market fund invests primarily in short-term investments, like your fixed deposits, like treasury bills, like commercial papers. These are investments that generally considered to have lower risk when compared to investments such as the stocks. So this is why money market funds are actually considered by many investors that are looking for relatively stable investments and also a good level of liquidity. Now, for the Stanbic IBTC money market fund, the minimum you can start investing with is 5,000 naira. So for the Stanbic IBTC money market fund, the fund size is about 2.8 trillion naira. So in simple terms, this is the total value of money that is currently invested in the fund by investors. And as of June 2026, the fund had an effective yield of 15.36% year to date. This gives you an idea of the yield that the fund has generated so far this year. So though it is important to remember that this is not a guaranteed future return and the yield can change over time. The second one I would like to talk about today is the equity fund. Yes, this is where it actually gets interesting. So for the equity mutual funds, the goal is actually to grow your wealth over time. So imagine you're a young person and you're already thinking about retirement and you're considering a particular investment that will help you save up for your retirement. Or you're already thinking of investing for your child, looking at a particular number of years, let's say 15 years, for your child's university education. The equity mutual fund is actually a great fit for that. So the equity fund actually invests primarily in the shares of companies. So when these companies do well, when they perform well, your investment also has the potential to actually grow over time. So because the prices of shares go up and down, the equity fund is actually kind of more volatile than the money market fund. And so that is why they are actually suitable for long-term investment. As a matter of fact, if you invest 10,000 naira into an equity fund today, it is very likely that by the time you check your portfolio tomorrow or next week, you might have seen that your portfolio has even gone below your 10,000 naira invested. But one very important thing to note when it comes to investing in equity fund is the fact that equities, that stocks or shares of companies, have potential to grow over time. And it has even been historically tested that they perform better than other asset classes. So that is why the equity fund is more preferable if you have a long-term perspective. So now let's use the Stanbic IBTC Nigerian Equity Fund as our case study. As of June 2026, the fund has delivered a year-to-date return of 37.58%. So it is considered an aggressive risk profile, which means that it is designed for investors that are comfortable taking on higher level of risk in pursuit of potentially higher returns. So the total amount of money that investors have entrusted to the fund is actually over 66 billion naira. So to invest in the Stanbic IBTC Nigerian Equity Mutual Fund, you also need a minimum amount of 5,000 naira. So you can see that it is actually very accessible. So if you are someone somewhere in the middle, you actually like the potential, the growth potential of an equity fund, but you also need a form of stability, then the balanced fund is a great one for you. So the balanced fund invests in a mix of different asset classes, the equities, the bonds, the fixed income instruments. So this actually helps you to reduce volatility and also kind of ensures that there is a balance between your risk and your return. So the risk level for this particular balanced fund is also a kind of high investment risk. So you can start investing with as little as 5,000 naira. And the fund currently manages over 16 billion naira on behalf of their investors. So looking at how the fund is invested, about 54% is allocated to equities, while about 46% is invested in fixed income securities. So you can actually see the balance, and that is why it is called a balanced fund. It combines both asset classes in one portfolio. So have you been watching this video up to this moment and you are yet to subscribe to my channel? Please, what are you waiting for? Kindly hit that subscribe button and press that notification bell so that you always get notified whenever I upload new videos. So now let's talk about the fourth one on my list, which is actually the dollar fund. So the dollar mutual fund is actually there to help you kind of spread your investments if you don't want all your investments to be in naira. So a dollar fund is a fund that invests in dollar-denominated assets. For example, your Eurobonds. So the thing is, if you want to invest in Eurobond in Nigeria, you need a minimum of, say, $200,000. So the fact is, if you don't have $200,000, you can still participate using the mutual funds. So you can actually buy a dollar fund that helps you still invest in such kind of investments. Remember I told you that mutual funds are basically pool of funds by different investors. So investors that cannot do such kind of investment by themselves single-handedly, you can still get the opportunity to invest in such kind of mutual fund. So for the Stanbic IBTC dollar fund, the minimum you can actually invest in Stanbic IBTC dollar fund is $100. However, there are other platforms like the Pluto's New by Afrinvest or like platforms like Bamboo that can help you, convert your naira into dollars, and then you can invest in such funds. So the fifth one on my list today is actually a very unique one. So this one is actually specifically designed for people that do not want their money invested in assets that are not Sharia compliant. So the instruments that are invested in this particular fund are actually Sharia-compliant investment. Different asset management companies call it different names, but for the Stanbic IBTC Asset Management, they actually call it the Imaan Fund. So the Imaan Fund is Sharia-compliant, which means that it follows Islamic principles of investing. But the thing is that anyone can actually invest in it if they are comfortable with its investment approach. So for example, the Imaan Fund actually avoids businesses that are involved in alcohol, tobacco, gambling, and companies whose main source of income comes from interest-based activities. As of June 2026, the Stanbic IBTC Imaan Fund has delivered a year-to-date return of 51.24%, making it one of the best performing funds in the Stanbic IBTC mutual fund lineup this year. So this fund has an aggressive risk profile, which means that it is suitable for investors that are comfortable with higher level of risk and are in pursuit of potentially higher returns. So with this fund also, the minimum amount you can start investing with the Stanbic IBTC mutual fund is 5,000 naira. So now that we have considered the different types of mutual funds, you may be wondering, so which one is the best? Well, the truth is, the best mutual fund is actually the one that matches your financial goals, your risk tolerance, and more importantly, your timeline. So if you are ready to get started, I have included a link in the description where you can sign up directly and begin your investment journey. So now to the important updates. So maybe you've been watching this video and you are like, okay, sure, I understand all these things you are talking about, but I still need someone to help me out. I still need someone to guide me step by step. I still need someone to help me which investment is best fit for me. That is why your girl is here. Yes, I got you. If you'd like to book a one-on-one session with me, simply type one-on-one in the comment section and I'll be sending you the booking link. Thank you so much for watching. If you found my content helpful, please don't forget to like this video, don't forget to share, and most importantly, don't forget to subscribe. I'll see you in the next video. Catch up with you next time.